So the first off, for final CA students, you have tomorrow examinations. So I will not spend more time on introduction, etc. My target is how you can have a quick revision of important stuff. So straight away, let's start with basics, which are again very important for your understanding of holistic view or having a holistic view on audit paper. First, understand your 100 marks paper. Entire paper is primarily, unless it is mentioned, it is on a statutory audit. So your answer should be based on statutory audit. So if you know the objective of audit, you will not be diverted from the main framework or from where you should be targeting the stuff or from where you should start your thinking. For example, everyone must be knowing the statutory auditor's objective is to express opinion on financial statement whether they reflect true and fair. And for that, he is supposed to obtain reasonable level of assurance that financial statements are prepared in all material respect as per applicable financial reporting framework, right? So why this objective is so important? Because you might get questions like in past there have been questions whereby auditor observed that there are non-compliance with labor laws, there are non-compliance with environmental laws, etc. And students keep writing on that environmental laws. See, understand your focus is financial statements, right? So you have to target only financial statements. So how to target financial statement when they talk about child labor, they talk about the environmental law, etc. So I know my objective, true and fair of financial statements. So any non-compliances will result into penal provisions, right? So penal provisions might be in form of pecuniary stuff, that is financial, or it might be something whereby you get cancellation of your license. So in both the things, it will definitely affect your financial statement. One is you need to make provision for penalty. Second, there is a doubt on going concern. So you have to write your answer which is relevant to financial statement. Okay, so basically a few important stuff. What is reasonable assurance? Reasonable assurance is high level of assurance, but remember it is not 100% assurance. Why? Because of there are certain limitations associated with audit. I'm going very fast because I respect time, because you have so much, you have just one day, so I'm going little bit fast. Okay, so reasonable assurance, because I have few limitations. Number one limitation is nature of evidences based on which I conclude audit evidence. That is generally persuasive in nature because you are not present when all the transactions are happening, right? You have to rely on certain evidences. Second, what you do is audit, not investigation. Then of course, when you do investigation, then nature of evidences would be conclusive in nature. So sophisticated frauds you cannot detect when you do audit. Again, financial statement have certain elements which are estimates and all. So if estimates themselves says they are not correct, then how you can give 100% assurance about that? So financial reporting process itself has some kind of limitations. And last one, you have to perform audit at reasonable cost, reasonable resources, and again, nature of industry, volume of transaction, so many factors. Therefore, you cannot give an 100% assurance. Remember, the question might be a different way, but the answer would be same. Like management is requesting auditor to certify financial statements. See, certification means obtaining absolute assurance. Or somebody will ask you why you are not reducing audit risk to zero. Audit risk cannot be reduced to zero again because of these factors. So this is one basic part. Second, true and fair view. Now when you will say true and fair view, this is something, a summary very critical. When financial statements are prepared as per applicable financial reporting framework, then we say they are true and fair. Now, sir, what is financial reporting framework? It is applicable laws and regulations for preparation and presentation of financial statement. That is what we termed as financial reporting framework. For example, Companies Act. Okay, so entire Companies Act will not say it is financial reporting framework, but relevant select provisions like Section 128, 129, 133, Schedule 2, Schedule 3, Schedule 5. These all are provisions which affect financial statements. So we'll call that as a financial reporting frameworks. So when your FS is as per FRF, we say they are true and fair. But when your FS is not as per financial reporting framework, there comes misstatement. So misstatement is not errors and all. These are the reasons for misstatement. So misstatement is nothing but a difference between what is actual financial statement and what it should be as per financial reporting framework. And there comes definition. Misstatement is a difference between amount classification, presentation, disclosure of a reported financial statement and amount classification, presentation and disclosure as required by applicable financial reporting framework. Okay, so that's the meaning of misstatement. Now, very important thing I'm covering now, which is relevant across all the standards, is knowing why. For example, in past 3-4 times question have been asked, what is auditor's role when there is a misstatement? So majority of the students says that if misstatement is there, he should communicate to management for rectification. If they rectify, then he will confirm. If no, then he will report. But see, SA 450, which talks about evaluation of misstatements identified during the course of audit, categorically says that once misstatement is identified, first you identify reason for misstatement, because that reason, that why for that misstatement will give you indicator the possibility of other misstatement, and also it indicates that there is some weaknesses in internal control system. So identify reason for misstatement. Based on that, you might have to revise your audit strategy, you have to extend audit procedures, and then communicate to management for correction. If management corrects, very good, perform audit procedures, confirm correction. If management refuses to correct, then go to those charged with governance, request them for correction. If they also refuse to correct, then ask them to give a written representation stating that they believe this misstatement is not material, does not require any adjustment. And later on, you consider effect on your opinion. So very important is why misstatement has identified. So this is one part of your basic stuff. So entire audit paper, whenever you are approaching with two objective. One, everything has to be linked with financial statement, and second, reasoning for that. Any negative stuff, what is the reason for that? Why is very important stuff. Okay, so this is first basic chunk of revision. A second stuff is coming.